Thanks very much for organizing this event, for having me here. And of course, we have discussed the banking sector already last year. And I'm happy to say, as Paolo already pointed to, it has been an outstanding year for the banks in terms of non-performing loan reduction. So just thinking back, end 2019, non-performing loans stood at 40% and 2020 at 30%. And now the four systemic banks have reduced their NPLs to around 10%, which is a huge step forward. But of course, this has had its impact on banks' capital position and asset quality. But also we have seen that the core profitability is improving. So going forward, of course, the big challenges are, as Paolo has pointed out, to continue improving core profitability through governance improvements, through strong business plans, risk management, and so on. And of course, to improve asset quality, capital position. That's for the banks. And for the broader financial sector, the resolution of the still very high non-performing loan stock in the economy will be essential. And then also, of course, capital markets functioning, broader capital markets can be improved. It's not very actively functioning, so the market ratio is much smaller than in other member states, and alternative financing sources should also be improved. Now, of course, a strong economic performance would help addressing almost all these challenges, and that's where the reforms come in. So continued reform implementation will be key also to help the financial sector getting stronger, and the strong financial sector is, of course, core to a strong economic performance as well. But I would also like to point to a very Greek-specific aspect of this, which is the signaling effect of continued reforms to investors and to rating agencies, and achieving the investment grade would, of course, be essential for sovereign financing, but of course also for bank financing. So all this is interlinked and very important. Now, from this perspective of the reforms, let me commend the authorities again on putting together a really good recovery and resilience plan. The Commission has praised it already, analysts have praised it already. Sorry that Thanasis cannot be here. He is one of our counterparts, and thanks to all our counterparts in the authorities for the excellent cooperation over the past 1 year, 1.5 years now on this. So it has been a very productive cooperation so far, and the implementation has started. So let me point out a few elements of this plan that are helpful also for the financial sector. Of course, there are some, though not too many, reforms that affect the financial sector, such as capital market supervision, debt monitoring. Several databases will be put together which will help transparency, help the creditworthiness scores, and also the aggregate debt monitoring, which are important to develop tools and policies. And then, of course, importantly, there is the loan facility, which channels 12.7 billion euros to the economy over the next 4 years. And a large part of this is channeled through syndicated loans through commercial banks. So, of course, commercial banks should also benefit from that. And I have just heard from Minister Skylakakis that the interest is enormous to these facilities, so which is very good news. Now, more broadly, of course, there are reforms to improve the business environment, and like simplification of processes, digitalization of administrative processes, continued simplification of licensing procedures. These are all very important. Digitalization also. And then some sectoral reforms, of which just let me point to some critical reforms for green transition, which of course now has become even more important in the current context, such as renewable energy investment licensing, and railways and electric vehicles, legal frameworks. So all these are very important. And finally, an important aspect is, of course, one of the notable features of the Greek economy is the very large share of SMEs. And a very large share of these SMEs are actually highly indebted and constitute this high stock of non-performing loans in the economy. So tackling this problem is again important from a financial sector point of view, but it's also important for the entire economic performance. And then, of course, so basically allowing the firms that are viable to restructure and move on, and more in general modernizing this sector and making these small firms more dynamic and extroverted is very important. And again, there are important reforms in the RRP which incentivize, give tax incentives for scale up and extroversion of these companies. There are reforms that enhance, improve the regulatory environment, and there is funding also for digitalization. There is funding for skilling, upskilling, digital skills of these companies. So all this is there. Implementation has started. Actually, one of these tax incentives for extroversion, this is one of the milestones that we are currently discussing and very close to approving. And so basically, going forward, implementation will be key for now and more in general for the resilience of the Greek economy and the financial sector.